Welcome back to our intermediate financial accounting class. Over the last few segments, we've been talking all about the different pieces of the accounting cycle. We've talked about why it's important, how the pieces fit together, what the flow of information is, so that we end up with good, solid information that we can report to our stakeholders. Now, over the last couple of sections, though, we changed gears a little bit, and we started talking about the cash to accrual conversion, or the accrual to cash conversion, either way. Now, these conversions, while not technically part of the cycle, are another set of key building blocks that we need to be comfortable with in order to really be good at financial accounting, because we do them all the time. We at least do the accrual to cash conversion every single reporting cycle, because we're required to do a statement of cash flows, and that's how we do it, or at least that's how we do part of it. The accrual to the cash to accrual, that's the other change, where I've been doing cash books, now I need a set of GAAP books. All right, let's make the change. And that happens occasionally, just not quite as frequently. So hopefully you're comfortable and you feel good using that worksheet and can go either direction. What we need to talk about now as we kind of wrap this up is, what if I don't need to do a full conversion, right? I don't have all the information to do a conversion from net income to cash flow from operations, but I don't have the cash flow from operations to do net income. What if I'm just looking for a quick one-line answer? Well, the worksheet works for that too. Again, that's an awkward way to say that, isn't it? The worksheet allows us to do that as well. There you go. That's a little bit better. And that's what I want to talk about today. So as a reminder, here are steps to the worksheet, and we can use those same basic steps when we have to do a smaller question. So let's take a look at a smaller example. Here I've given you just a fraction of information. It's not a full balance sheet, it's just a few accounts, and it's not a full income statement or cash flow statement or cash flow style income statement. It's none of those. It's just a few line items. But using these line items, you can get cash received from customers, cost of goods sold, and cash paid for income taxes. Normally we would start out by getting our change in accounts, but to save us a little bit of time, I've given you that information. It's right here. So that's step one, already taken care of. Step two is to set up our worksheet. So let's go ahead and do that. We're just going to worry about this first one right now. Cash received from customers, I need really just a small worksheet. And again, I'm going to put accrual information here. I want to get the change in cash there, and then my cash flow information over here. That's step two. Step three is to put in what we know. So we're looking for cash received from customers. That's the cash line. So I must have an accrual number in here somewhere. And sure enough, the accrual equivalent of cash received from customers is sales revenue, and it's $225,000. So let me put that into the worksheet. Sales, $225,000, positive, because it's a revenue. Just like we want the cash flow to be a positive number. I've collected a positive amount from my customers as opposed to me paying them a negative cash flow, which would be bad for business, just to make sure we're clear on basic business here. Next, I need to put in my change in cash. That's my step 4. So going back to this list, which of these changes right here are going to affect either cash received from customers or sales, whichever way you prefer to think about it? There should be 2 of them. Accounts receivable, because that's specifically keeping track of the amount of stuff my customers have ordered but not paid for yet, and unearned revenue, where they paid me in advance. So these are the 2 adjustments I want to put in, and we've got a negative change because of our accounts receivable, and we've got a positive change because of unearned revenue. And you can see that here. We went from $35,000 to $40,000. Accounts receivable goes up, so cash goes down. Unearned revenue goes up. This is a liability, so we're using the wave, so cash goes up. So that's what our numbers are showing. Let's take that -5 and that positive 2 and put it into our table here, or our worksheet. So we've got a change in accounts receivable, $5,000, and we had a change in unearned revenue, $2,000. Now I'm ready for step 5, and that is to convert, because I'm not worried about any of the other changes. I'm not putting in any other accruals, because I just want to know this one line item. Now again, before I use my worksheet equation, I always add up multiples, and it would help here if I put in my negative sign. There we go. Okay, so -5,000, +2, adjustment of $3,000 total. And now I'm going to use my worksheet equation, which, if you remember, accruals plus the change gives me cash flow. So $225,000 plus a negative $3,000 gives me $222,000. And that's my cash received from customers. What we want to do now is we want to go ahead and answer those other two questions. And I'm going to give you a few minutes to do these questions on your own. Here's our cost of goods sold calculation. We started with the cash paid for inventory, which is the number that I was given. So $125,000, it's an outflow, so it's negative. I had two adjustments that I needed to make for cost of goods sold. So the change in cash, I had $7,000 from inventory, $5,500 from accounts payable. So a net effect of $1,500. I take my negative $125 minus the $1,500, and that gives me a bigger negative number, $126,500, which is what we see down here. So there's the second question. The third question was to figure out cash paid for taxes. So in this case, we're back to having accrual information and getting cash information. The solution looks like this. So again, I start with what I know, negative $65,000 in income tax expense. My change in income tax payable is the only adjustment that I need to make. There weren't any others there, so it's negative $2,000. So negative $65,000 minus $2,000 gives me cash paid for taxes of $67,000, and that's my number. Key thing here with the worksheet. Number one, it lets us go through and simply put together a full conversion. Accruals to cash flow or cash flow to accruals to net income. We can do a full-blown thing. But we can also use it as a shortcut. We don't have to have the full statement, right, in order to use this tool. So if you're in a meeting and saying, well, income tax expense was X, well, okay, well, how much did we really pay? Oh, well, that's easy. Let me just put this together for you. Or advertising or office salaries for our office group. Can do that either way. So quick and easy adjustments that you can make here. That's what makes this worksheet a key concept in our discussion. So with that, we're going to wrap up our discussion, not just of this segment, but of our whole discussion of the accounting cycle. We've talked about lots of key information here, lots of important stuff. The whole accounting cycle, how it works, the pieces of it, how to do journal entries, how to do adjusting entries, etc. And then we did this cash flow conversion stuff as well. Before you move on into new chapters and new lectures and new discussions, please make sure you're comfortable with these basics. If you're not comfortable with journal entries, you need a little bit more practice. And I'm happy to help with that if I can. If not, you can find it in just about any intermediate book. But please, make sure you're comfortable with this stuff, because we're going to build on these building blocks with everything that we do moving forward. All right, with that, I will see you when we start talking about our income statement and the other financial statements coming up.